What if I told you that Figma's IPO strategy is shaking up the stock market in a way no one expected? This bold move might just set a new precedent for tech companies everywhere. Stay tuned to find out how. In an unexpected twist, Figma has announced that its upcoming IPO will allow existing shareholders to sell nearly double the shares the company itself is offering. This unusual decision has caught the attention of investors worldwide and could significantly impact how IPOs are structured in the future. In this video, we'll break down Figma's strategy, dissect the potential outcomes, and explore why this move is generating so much buzz in the financial world. We'll dive into the specifics of Figma's IPO plan, revealing how this decision allows existing investors to cash out a remarkable number of shares. You'll discover the motivations behind this move and understand its potential implications for other investors. We'll also analyze the role of Figma's founder, Dylan Field, and how his retained control could shape the company's trajectory post-IPO. Figma's announcement of its projected IPO price range between $25 and $28 has piqued significant interest in the financial world. However, what's grabbing attention even more than the impressive numbers is Figma's unconventional strategy concerning share sales. In a surprising move, the company is allowing existing shareholders to sell a substantial number of shares beyond what the company itself plans to offer. Figma intends to sell 12.5 million shares, but existing shareholders have the green light to offload nearly double that amount, 24.7 million shares. This strategic decision may indicate a high level of confidence in the IPO's success and a calculated approach to handling shareholder interests. Among those poised to benefit heavily from this IPO is Figma's founder and CEO, Dylan Field. Field has revealed plans to sell 2.35 million shares, potentially walking away with over $62 million at the mid-range price, and possibly more if the IPO performs better than expected. Despite this considerable cashing out, Field is set to maintain significant control over Figma post-IPO. He will hold a commanding 74% of the voting rights, thanks to supervoting rights attached to Class B shares, which offer 15 votes per share. Furthermore, he exercises voting rights over the shares of his co-founder, Evan Wallace, ensuring his continued influence over Figma's strategic direction. Venture capitalists heavily invested in Figma, such as Index, Greylock, Kleiner Perkins, and Sequoia, are also set to capitalize on the IPO. These investors are planning to sell portions of their holdings, potentially cashing out 1.7 million to 3.3 million shares each, depending on the market demand for over-allotments. In a market starved for liquidity, this opportunity allows them to potentially deliver some returns to their investors while still holding on to the majority of their stakes in Figma. The broader interpretation of this move is that without opening up these share sales to existing stakeholders, Figma might not have met the anticipated high demand for shares. Interestingly, the company itself will not earn directly from the sale of stockholder shares during the IPO, a situation not uncommon in such high-stakes public offerings. Yet, if pricing exceeds the optimistic end of the spectrum, a scenario often seen with high-demand IPOs, Figma will not only enhance their capital raise, but shareholders will benefit significantly too. Initial expectations from IPO specialists suggested Figma could sell around $1.5 billion worth of stock. If the IPO surpasses these expectations and prices above the suggested range, Figma could potentially become the largest IPO of 2025. As the IPO could unfold as early as next week, all eyes are on Figma, with the company maintaining silence beyond their initial announcements. To recap, Figma's IPO strategy is as groundbreaking as it is controversial. By allowing existing shareholders to sell more shares than the company, Figma is challenging traditional IPO norms. We've unpacked the reasons behind this decision, discussed its potential impact on the market, and considered how it reflects on Figma's future as a public entity. As the IPO date approaches, all eyes are on Figma to see if this bold gamble pays off. What do you think about Figma's unique approach to its IPO? Could this strategy redefine how tech companies handle public offerings, or is it a risk too great to take? Share your thoughts in the comments below, and don't forget to subscribe for more insights on the latest in tech and finance.